Real estate firm Royal LePage has cut its forecast for home prices for the final few months of this year. After weaker than anticipated prices in some major markets in recent months, it now expects prices will be up 7% in the fourth quarter compared to the same period last year. Now, that is down from its previous forecast of 8.5% gain in that quarter. For more on this, we're joined by Yolevski, COO of Royal LePage. Thank you so much for coming in.
Thanks for having me.
So it's kind of interesting because, the gain of 7% sounds like it's a big gain, but it's compared to prices last year when prices were quite a bit lower.
That's right. So if we go back to last year, what was happening in the fall of last year was that we were absorbing the full impact of the successive interest rate increases that we saw. So by the time you got to fall, you had seen prices drop to some extent. So when we compare now to where we are, what we saw at the beginning of this year in 2023 is that prices actually ran up again in the springtime. So to be 7% up at the end of the year, not really a surprise, given that we did see that rebound earlier in the year, and we're not predicting a large drop in this last quarter.
Right.
Pretty much just a flat scenario for the remainder of the year.
After a couple of months of some weakness, so some those prices, that initial run up that you talked about at the beginning of this year has been reversing a little bit.
That's right. So we saw a couple of things happen over the summer. One is that interest rates went up again, and we know when rates go up, consumers are going to react in two ways. One, they're going to look and see if prices are going to drop, and they're going to want to make their move then. They're also going to hold back and take a bit more of a wait-and-see approach, both on the sell side and the buy side, which is going to lower the overall transaction activity that we saw. And we saw both of those things happen over the summer.
Yeah, can you just sort of characterize what the activity out there is like right now?
It's a really interesting market we're seeing, and it is a bit of a divide depending on where you are in Canada. If we take our biggest market in the GTA, right now what we're seeing is, finally, some would say, a build-up of inventory over just the last 6 weeks. We started to see those inventory numbers climb, and they had been absolutely anemic up until that point. We have not seen prices go down very much at all in the GTA. Actually, we saw prices month over month go up a little bit in September. So we're not seeing any of that inventory translate yet to lower prices. Now, if it's sustained, we might see a small correction on the prices again. Nothing dramatic, but more inventory typically would put some downwards pressure. If we go to an opposite situation and we look at Calgary, Calgary is still climbing quite a bit month over month in terms of sales activity and prices. They didn't see that summer slow down, and because of their affordability and a lot of desirability right now to move into that province, we are seeing people in Alberta buying in Calgary, people from outside of Alberta buying in Calgary, and they continue to see sales activity climb. We think they're going to end up 9.5% higher than end of last year.
Yeah, there has been quite a flow of people into that province, into Alberta altogether recently. When you're thinking about areas where prices have weakened, are there some places that are, seeing that more so than others?
Well, when we look at our study and our survey that we've completed, it's nothing that's alarming. There's small numbers you're talking about in terms of those drops. You might see some single-digit percentage quarter-over-quarter drops, and then some increases or flatness year over year. We do know that in areas where there are a high number of investors, such as condos, we haven't seen it yet, but we anticipate that there could be some more weakness in those markets, and then also in secondary properties, given that those are often considered luxuries and they're further away from city cores. That's another potential area. We haven't seen that play out yet, but those are things to look forward to.
Yeah, I was reading something on the cottage market today about some people listing for, a whole heck of a lot less than they bought for because they wanted to get that cottage off their hands because of these higher, variable rates or whatnot, if that's really pressuring some people out there right now. Are you seeing some of that movement starting to happen in the cottage market?
We haven't seen it in particular in the cottages, but we know that people are, if they're in a variable rate situation, paying more potentially than they were before, or paying the same, but taking a longer amortization potentially on that mortgage. So we're not, though, seeing forced selling in the market. So there's also been some talk about that. Are we seeing people that are moving into power of sale or that are really feeling pinched to move out of their property. Now, there will always be examples of that, but we're not seeing it as a trend. And our analysis and our sister company, who is an appraisal management company and also a mortgage insurance company, we're not seeing that trend from those sister companies. So right now, Canadians are paying their mortgages, most likely due to high employment rates, and they are not finding themselves in a distressed situation at this time.